Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me in another episode of Reverse Mortgage Radio. Today, I want to jump right in because we've got a lot to cover. We're picking up where we left off from last week, which was frequently asked questions. I'm trying to dispel so many of the misconceptions and myths and half-truths of reverse mortgages because way too many people think they understand how a reverse mortgage is and what it is. And they don't. They might hear things like, oh, it's too expensive, or it's an expensive program, or it's only for desperate people, or all kinds of crazy things. And they just are not true. You're going to give the house to the bank, or the bank's going to take your house when you die and take all the equity from your estate. All these things that just are not true. But the goal of this show is education. That's what been my goal for 22 years of specializing in the reverse mortgage business, is just doing my best to make sure that people get accurate information so they can make an informed decision as to whether or not a reverse mortgage is right for you. That's really all that matters. It doesn't matter if your neighbor thinks it's a good idea or your brother-in-law. It's just what works for you. It drives me crazy. I talked to a guy recently. He was referred to me by another mortgage guy that they're friends. And he says, yeah, the reverse mortgage is good. You should look into it. I met with the guy. He's like, yeah, this looks good. I'm really, let me look over the information. I think it sounds great. And then he had a death in the family and things kind of have taken a lot longer. And he says, yeah, I called him back. And he said, yeah, I've talked to a couple other people and they're just really negative about it. I'm like, well, what do they know about it? He said, well, they sow doubt. That's what they do. They sow doubt, S-E-W, sow doubt in people's minds. And it could be a retired plumber. It could be maybe a misinformed financial advisor even, or another real estate agent that maybe thinks that it's a bad idea. Maybe it's somebody who's very wealthy and just thinks that nobody should do that unless you're really desperate. And it's just flat out not true. Or it's going to be too difficult to qualify. I don't make much money. I only live on Social Security, or I'm self-employed and I deduct everything. You don't know until you do the research and see what we can do. That's really what it boils down to. And so this guy's still thinking about it, and I'm going to follow up with him at the end of the month, and hopefully we'll be able to meet again, and I can help explain things to him that maybe aren't perfectly clear. Sometimes I think it's perfectly clear when I'm explaining it to people, and they say, yeah, this makes sense, and it makes sense to them at that moment, right? And then somebody says, well, what about this? It's like, oh, man, he mentioned that. What was it? I just can't remember. And then they start having doubts. Not that it's wrong to have doubts. It's not. You need to understand it fully. But just that's the goal of this program. Go back to my website. You can listen to last week's show about the reverse mortgage frequently asked questions. I only got to like 3 questions. I touched on a lot of others, but I talked about what a reverse mortgage is, how it works, and then also how much money people can get from it and how do they get the money. Because there's different ways you can receive money from a reverse mortgage. Please go back to the show or back to my website at reversemortgageradio.net. Reversemortgageradio.net is my website. You'll see right up there on the home page, it has the radio show first. That's last week's radio show. Every week, my web guy updates it. And you can also look at past shows. If in the upper right-hand corner, click on radio shows, and you can go there and listen to past shows. You can look at my blog posts. You can see testimonials from other customers, all kinds of good information that I have on that website. You can also just simply pick up the phone and call me. My number is 303-467-7821. That's my direct line. It's a office number, actually a phone number that I've had since 1999. I'm not one of these fly-by-night guys that will get a number and change it or leave town or any of this stuff. I've been in the same house for 27 years, I think, since 1998 in Westminster. I've lived here for 27 years. I've been part of my Kiwanis Club since 2010. I've been around. I'm part of the community. I'm not going anywhere. If you have a question, a problem with me or the loan, 5 years later, I'll still be here unless I hit the lottery. But you got to buy a ticket, right? That's my downfall. I don't buy lottery tickets. Every now and again, I guess I do. It's kind of fun, but it's just a waste of money. It's just okay. Well, I'll see, and I dream about it, and then I look at the numbers, and I don't get any right. Usually, I think I got the most I ever got was 2. But either way, a reverse mortgage, in a nutshell, is a loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can use. You never have to make a payment on this loan as long as you live in the home as your primary residence, pay the property taxes, pay the homeowner's insurance, maintain the home, and keep your name on title. Do those 5 things, no payment is ever required. However, there's no such thing as something for nothing, right? This loan was designed by bankers. Well, bankers and also some brainiac type people, because it's really a very well put together program. And it's the bank does make money. The lenders still earn money. You say, well, how's that possible when I'm not making a payment? They charge interest every month. You don't pay it, or you don't have to pay it. You can pay it, but that interest gets added to your loan balance. Your loan balance gets bigger and bigger and bigger. You might borrow $100,000 now. 10 years from now, it might be $200,000. Now, odds are the value of your home, if it started out at $400,000, now it might be $600,000 10 years from now, or $800,000. Who knows? Depending on appreciation and all that stuff. Odds are you're going to have a lot of equity left, because we don't loan 80 or 90% of the value. It's kind of funny. I had somebody call me back. I talked with her 12 years ago in 2013. I pulled up the numbers. She left me a voicemail, and I looked up her name, and I gave her a quote in like May of 2013. And I looked at it. She was 12 years younger. I mean, now she's 78, so she was 66 at that time. When she was 66 in 2013, I was loaning her 65% of the value of her home. There was an issue with the way your home was titled, and we couldn't do the loan at the time. Now I think we could do it, but I can only loan her 42% of the value now. And it really stinks, because I think I could do it for her. I think that we've probably corrected that issue with the way the home is designed as a condo instead of a single family home. But either way, I could probably get a loan, do a loan for her, but I can't loan her enough to pay off her existing mortgage. Isn't that crazy? 12 years ago, she was 12 years younger, and I was loaning more money to her, like 22% more of the value back then. That's because all the changes over the last 12 years that FHA has made to the program. Now, don't get me wrong, we were loaning too much money to people back then as a percentage of the value. And then when 2008 hit, and they started making these changes like in 2010, and they hadn't really fully taken effect even in 2013. But in 2014, I think 16, and then 2017, there was a huge reduction in the amount of money that we could loan as a percentage of the value of the home. And so it's just unfortunate that I can't help this lady now, just the way it worked out. It really stinks. But so there's going to be a lot of equity left in the home. That's the point I'm making. We're not loaning 60% of that value to people anymore. And it's a good thing, actually, because you're going to have a lot of equity left in your home. You can take the money out a number of different ways. You can receive it as a lump sum. Now, there's restrictions now. There didn't used to be back in 2013 when I talked to this lady. But there's also, so you could take it as a lump sum with restrictions during the first year. You can take it as a line of credit. You can also receive it as a monthly payment where we deposit money every month in your bank account. Or you could do a combination, and you can even change it up as the years go on. If you leave it all in a line of credit and 10 years later, now you've got $200,000 in your line of credit and you need monthly income, say for in-home care or something like that, you could start receiving it monthly. And it's a very, very flexible program. All right, that was a quick recap from last week. We're going to get into some of these other things that I want to talk about, because one of the most common questions people have been trained to ask, what are the costs? What are the rates? Okay. How much is this going to cost me? What's the interest rate? Okay. Obviously, the interest rate affects your payment. But you know what? There's no payment on a reverse mortgage. There's no monthly payment required on a reverse mortgage. Now, you're still charged interest. And interest rate is kind of weird with reverse mortgages because there's 3 different interest rate options. You can receive a fixed rate, which has a lot of downsides. Nobody chooses fixed rate right now. Number one, that's the highest interest rate, and you're locking in that rate. Hopefully, rates are going to come down. We don't know for sure. I'm hoping eventually they come down. I think this year they're going to kind of hold steady. I'm not seeing them dramatically increase or dramatically decrease unless there's a big recession. If there's a huge stock market crash or real estate crash, which I don't foresee either one of those, I think there'll probably be a correction in the stock market. But either way, interest rates, I think, are going to stay steady most of the year. They're in the low to mid sixes right now for reverse mortgages, which is lower than a conventional mortgage. I think those are close to 7% now. I think we're going to balance between 6 and 7% interest rate wise. That's the rate you're charged on the loan. And now, unfortunately, right now, the interest rates on a fixed reverse mortgage are in the high 7s. That rate I just quoted you in the low to mid 6s right now, that's the adjustable rate. That's a monthly adjustable rate. In other words, the interest rate can change every single month. It can never increase by more than 5% above whatever rate you start. If you're starting at 6.25%, the interest rate can never go above 11.25%. People are like, "Oh my gosh, Bruce, 11.25%! You got to be kidding me!" It's the odds of that happening are low, okay? But it could happen. It could go down to like 2 or 2.25% or 2.5%, depending on how it's set up. So rates could come down too, dramatically. I don't think either of those scenarios is very likely. They're possible, but they're not likely. But the other thing that I always tell everybody, I break down an amortization schedule for you. I show how if you take out $100,000 today to pay off your existing mortgage or however the loan works out, I show you every year, this is the amount of interest you're going to be charged. This is the amount of mortgage insurance you're going to be charged on an annual basis. This is what it would be. You could see 5 years, 10 years, 20 years down the road, up to age 99, we run these numbers for you. And so you can see how your loan balance is growing every year and how the interest compounds. So in other words, what that means is if this year you're charged $10,000 in interest, now you wouldn't be charged that much in interest on a $100,000 loan, but just for simple numbers, next year you might be charged $11,000 in interest over the course of the year, even though the interest rate stays the same. That's because you're being charged interest on top of interest. That's compounding. Now, odds are, too, if you have a line of credit, there's a growth rate on that line of credit. And I've done whole shows on this before, just 30 minutes or so about how the line of credit works. And it is the best option for reverse mortgages, I think. Now, it depends on your situation, though, too. Don't let me talk you into something. But I love the line of credit. When I do a reverse mortgage, I'm going to get a line of credit. I don't need to do a reverse mortgage, honestly. I'm sure I'll be okay without a reverse mortgage, but I just love the program. And when I'm qualified for it and I'm in a house that I'm going to stay in, I'm going to do it, period. My wife knows it. My financial advisor knows it. Everybody I know knows it. I tell them, I think this is the best program in the world. And I wish I could get it now, but I don't have it yet. Anyways, so the line of credit is a great option for you to receive a monthly payment. For a lot of people, makes a difference between struggling every month and being able to go out to breakfast after church with your friends, or being able to go out to a lunch or join a service club and pay for your meal every time you go. Those things make a difference in people's lives. And to be able to have that community and to be able to live the life you really want to live, or take a trip with your family to go see your family. Maybe you've got kids in California or Texas and you want to fly down there and see them, or fly them here. And they don't have the money to come, and you say, hey, it's okay. You pile your wife and 2 kids into an airplane and get here. Or I'll pay you the money for the gas money and a hotel when you get here, or whatever the case may be. That stuff makes a difference in people's lives. And that's what a reverse mortgage does for you. So the interest rates can vary. The adjustable rate is the way everybody is going right now, just because it makes most sense. With a fixed rate, a fixed interest rate, you have to take all the money in one lump sum. Let's say you own your home free and clear. FHA tells us, though, you have to take all the money in one lump sum with a fixed rate, but they're not going to allow us to give you all the money that's available. If you have $100,000 available in a line of credit, FHA says you can only take 60% of that money in the first year of the loan. So you only get $60,000 if you qualify for $100,000. You can only take $60,000. But with a fixed rate, there's no line of credit option, no monthly payment. So you get $60,000 at closing, whether you need it or not. If you don't take it, it's never going to be available to you. And then if interest rates drop, you have to refinance. You can't redo the loan, or you're not going to see that interest rate reduction. Whereas with an adjustable rate, you have a lot more payment flexibility. You can receive money as a monthly payment, or you can set up the line of credit, or a combination, or a lump sum, or all of the above. And if interest rates come down, then you get to take advantage of the lower rate. If interest rates go up, you also will be charged more, but you don't pay it out of your pocket. That's a key thing you have to remember about reverse mortgages. As far as closing costs go, closing costs are pretty similar to a conventional mortgage. There's an origination fee, there's appraisal, title insurance, closing fee, credit report, all that stuff. And all that's pretty similar. The difference is mortgage insurance. And mortgage insurance is on all FHA loans. If you have ever had an FHA loan, you were charged and paid mortgage insurance. With a reverse mortgage, you're charged mortgage insurance, but you don't actually have to pay it out of your pocket. You're charged mortgage insurance at the rate, the upfront mortgage insurance premium is 2% of the value of the home. That's why people say it's expensive, because there's mortgage insurance. If you have a $500,000 home, that's a $10,000 charge right there. Boom, right off the top. However, what do you get for it? It's not just throwing money out of the window, because you're covered. There's a couple of ways it protects you and your estate. Generally speaking, mortgage insurance protects the lender? Yeah, the lender. Believe it or not. But what does that do for you? Because the lender is guaranteed to get their money. So let's say there's a market correction. 2008 happens all over again. And this happened to people in 2008. We loaned them, at that time, we were loaning 60 or 70% or 75% of the value. And then the property value drops by 30% or 40%. And your loan balance has increased over the time. Now you owe $10,000, $20,000, $50,000 more on the loan than the house is actually worth. And in that case, nothing changes. You continue to live there, pay your taxes and insurance, maintain the home, keep your name on title. As long as you do those things, it doesn't matter. You could owe $1 million and the house be worth $10. And the lender can never, ever, ever, ever kick you out. The reason you have that protection is because of mortgage insurance. You see, what would happen, as long as you're living there, it doesn't matter. The line of credit is protected as well. If you've got $50,000 in a line of credit and you owe $100,000 more on the house than it's actually worth, that $50,000 is still available to you. I had a lot of people that I talked to in 2008. They weren't customers, but they called me and they said, I had an $80,000 line of credit with a $30,000 balance on my home equity line of credit. And the bank just cut my line of credit down to $30,000. So I have no line of credit left because the underlying asset lost value. People who had a reverse mortgage at that time still kept their line of credit available. And in fact, it grew. Their line of credit continued to grow over time. So that's a huge benefit. And the only reason it existed was because the lender's protected mortgage insurance wise. What happens is if you end up owing more on the home than it's worth, as long as you're living there, it doesn't matter, and paying your taxes and insurance. But then you pass away. Your heirs inherit the home. They're like, oh my gosh, Mom owed $100,000 more on the house than it's worth. It doesn't matter. You can sign the house over to the lender and walk away. The lender will sell the house for whatever they can get for it, and then they file a claim with the mortgage insurance company, and the mortgage insurance pays them their money. They're not losing any money. You're like, well, who cares about the bank? You should, because if the bank's not losing any money, they ain't coming after you, your estate, or your heirs. It's called non-recourse. So the lender can never come after you or your heirs for any extra money, any money that they lost. That's called the deficiency balance. And that did happen in 2008. People were upside down on their houses. They got foreclosed on, and the bank would then sue them for the $10,000 or $20,000 or $50,000 that the bank lost. And then they would write it off, right? The bank says, okay, well, we're not going to collect it from these guys. They write it off, and they send it to the IRS. And it's considered income to these people. So the IRS then says you have to pay taxes on that money because the bank forgave that debt. None of that can happen with a reverse mortgage, okay? You're safe with a reverse mortgage. By the way, if you just tuned in, you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons, and I've been originating reverse mortgages. I'm down in the trenches with you. I sit across the kitchen table with you when you are looking into a reverse mortgage. You're welcome to come to my office too. We're in the the lower Highlands part of Denver, northwest Denver. Used to be a mob area, I guess. The Italian mob was involved in it years ago. Now it's all trendy. People will buy a home for $600,000, scrape it, and build $1 million home on the same lot. Kind of crazy. I don't know where this money comes from. But either way, you can come to my office. I come to you. I'll meet with your family. We could do it on Zoom. We could talk on the phone, whatever. You can call me at 303-467-7821. 303-467-7821. That's my number. I could leave this company, American Liberty Mortgage. I'm not. I've been there since 2011, whatever, 14 years now, going on 14 years. I've been there since 2011, and I'm not going anywhere. But if I did, you could still reach me at that number, 303-467-7821. It's my phone number. I have it forwarded to my cell phone. Okay, that's not my cell phone number. That's a landline. Don't text me there. But it's forwarded to my cell number. You can also reach me online at reversemortgageradio.net. reversemortgageradio.net. And if you just tuned in, you missed a great show. We're not quite done yet. But go back to my website later this week, and the entire show will be up there on my website, right on the homepage. You can also click in the upper right-hand corner and get a free quote, and I'll give you the quote right then and there. You don't actually have to talk to anybody. Just put in some general information, no social security number, no income, just general information about your house, your date of birth. We do have to know that. And your spouse's date of birth as well if you're married. You can also download my free consumer guide. And a lot of people, you don't even have to put a phone number in for the consumer guide, just an email. And I need to be better at follow-up because I don't follow up enough with you. You get an email from me, and it has the consumer guide with it, and then I don't follow up like I should. So you're not going to get harassed by me. I do not sell your information. I'm working on a better follow-up system, in all honesty. So you might hear from me later. But if you want me to call you, please put in a phone number. I think there's an option for it on there, but you can get it without any commitment at all, okay? Anyways, let's get back to the frequently asked questions. Last week, I talked about 3 different questions. Today, I'm talking about closing costs and interest rates. We also want to talk about what happens when the loan comes due. Now, this could be an entire show too, and I think I've done entire shows over the years. I've been doing this radio show since 2017. So what is that? 8 years now? Something like that, 7 or 8 years. So anyways, reverse mortgage, what happens when the loan comes due? Well, the loan only comes due when you permanently leave the home or if you don't pay your taxes and insurance. Keep that in mind. Now, odds are you're going to maintain the home well enough to where nobody's going to complain about it, but there could be somebody that complains about your home, maintaining the home part. You have to maintain it and keep it in decent condition, right? If you don't do that, if there's broken windows, 3-foot grass in the front yard, and a neighbor complains to the county's going to do a title search or do a search on who has a lien on the home and who owns it. They may send you a letter as a homeowner. They may send me a letter as the lender. And then I get a letter saying, you've got a loan against this house and whatever the case may be, it's going to be condemned or something. And in that case, then I'll have to get involved or the lender, whoever's servicing your loan would be involved. But odds are if that happens, you're not living there anymore anyway, because I don't think you'd let your house get in that condition. I hope not anyway. But those are the only things that make the loan come due. So you got to pay your taxes and insurance. And even then, if you don't pay your taxes, you're going to get letters in the mail and you're going to get phone calls and say, what happened? You're going to say, I don't have the money to pay taxes. And we're going to pay them for you. However, you're going to have to sign a repayment plan. You're going to have to qualify and you're going to have to pay the lender back the money that they're forwarding to pay the taxes. And if you can't, then they're going to foreclose on you. Okay? And that's bottom line. That's the F word that I do use, foreclosure. I don't like to use it, but you got to know the consequences, right? Now, odds are most times when a foreclosure happens, it's because somebody passed away and the heirs did not do anything with the house. They didn't sell the house. They didn't sign the house over to the lender and walk away. They didn't do anything. They just let the house sit there. And the lender had no choice but to foreclose at that time because we got to try to get our money back. And we'll foreclose. We don't like to foreclose. We're in the lending business. We're not in the homeownership business. All right. But that could happen. And then we'll pay off whatever we can on the loan, and whatever's not paid off goes to the mortgage insurance, and the lender will collect the mortgage insurance. We only can sell it for whatever is owed against it. So an investor may get a great deal because they'll buy the house cheaply from us at that point, at the foreclosure sale. But the heirs have 6 months to inherit to pay off the loan. Technically, it's 6 months. It's really there's hoops you have to jump through. You got to let the lender know that you're going to either refinance or sell the home. What your plan is. But please call me with any questions, and just you can reach me directly at 303-467-7821. I'd love to go into detail with you about how all this works. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. I'm not sure if this is for you. It may not be, okay? But are you open-minded enough to at least take a closer look at reverse mortgages? You can decide if it's right for you, but you got to get the facts. That's why I'm talking about this today. That's why I've been doing this show for the last 7 or 8 years. I want to make sure that you have the facts to make an informed decision. But you've got to be open-minded enough to say, you know what? I may not know everything about reverse mortgages. That's why you listen to the show, right? Thank you so much for listening to the show. I hope you have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.